Have you ever gotten to look at your bank account and all of a sudden there's random charges for insufficient funds or overdraft charges? What if I told you there's a way to set up your bank account as well as your finances so you could avoid all those fees? Hi, my name is Peyton, and on this channel we go over things such as personal finance management and getting started in the stock market and investing options that are easy for beginners and hopefully maybe a little bit more advanced information as we go along. Today, we're going to discuss how to create a financial framework that actually makes our lives a lot easier and makes it a lot less stressful dealing with not only our paychecks, but all the bills that come out of that. So, if you want to see more videos like this, please make sure to subscribe and tick the bell icon down below to get notified whenever there's new videos. All right, so let's jump into it. So, I'm going to switch over to my other screen real quick. So I've created a couple of diagrams here that we'll run through pretty quickly, and then we'll go over how to use this. Okay, so quick rundown. The icon here with the briefcase, that's going to be your career or your job. Okay, this right here is going to be your paycheck, and then finally bank accounts. So let's do a quick run through. This is what most people have set up for their actual normal bank account. You have your job, and before they pay you, they go ahead and take out federal taxes, state taxes, Social Security, and Medicare. All the normal items that have to be taken out of paychecks, okay? And then finally, your actual paycheck rolls over to your bank account, and then we proceed to spend that. And we'll spend that on normal things such as groceries, clothes, and paying our utility bills and everything else. So this is a very simple format, but the problem that kind of comes into play here is, yes, we have one card to pay our bills, one card to put in all of our billing accounts, but that also means that there's one account for everything to come out of. So we have to keep track of what money we can spend, what money is going towards bills, and whether or not we've got enough money to avoid actually having overdraft fees. And that can be pretty difficult. So other ways that your account might be similar to this is you might have a 401k coming out, which is a pre-tax money, so it never makes it to your paycheck, and it's there going towards your future. Another way that this could be set up is you might have also added a savings account where you're trying to save money to the side. You may have some kind of brokerage account with Webull or an IRA that you're setting to, such as say Vanguard or Fidelity or something else like that. But the problem still occurs where you've just got one account for paying your expenses and bills. So it's really hard to track that, and it's really hard to automate finances. So there's a couple better ways of doing this. One is that we could actually in turn take our paycheck and split it up so that it goes to multiple areas. So before the paycheck ever makes it to our bank account where we can go and spend it, we could automatically have a portion come off to our brokerage account, to our IRA, maybe to multiple savings accounts, one for say large purchases, another one for vacations. You can set up multiples of those. There's a lot of work in setting those up, and so sometimes it can be kind of a pain to do that. But the big difference here is we're starting to think about splitting our personal checking, where we can go and do spending with the personal expenses. So what you could do is you can actually have two separate bank accounts. Now these could be with the same bank, or they could be separate banks depending on what your needs are. But basically part of your money goes towards bills, part of the money goes towards spending. And then if you do this properly, you can actually avoid having to keep track of necessarily every bill that comes out. All you have to do is just check your personal checking and see whether or not you have funds in there that you're able to spend. And that's kind of the only thing you have to manage. We'll go over in a minute how to actually set it up. Okay, kind of a better way of doing this, or an even better way, is to actually, instead of going out to say multiple savings accounts, a brokerage and an IRA, we keep our checking design that we looked at previously. But what we do is we try to keep our IRA and our brokerage account through one company. So instead of saying having Webull and Vanguard, we just have everything through Webull, and we've got a brokerage account and IRA there. That means there's only one place we have to send the money, and then from there we can split it out to an IRA if we want to. So that makes that process a little bit more streamlined. Another thing is instead of having multiple savings accounts, which are a pain in the butt to set up because you have to fill out so much paperwork, you could use a service like Betterment, where basically you funnel money to Betterment, and then they give you buckets where you can place your money. So for example, I have a checking account through Betterment, and then I've got a bucket for major purchases, vacations, college fund, additional retirement if I want to use it. I'm not required to put anything in there. There's no minimum deposits or anything. And then an emergency fund. And then what I can do is I can say, hey, every month send $100 to Betterment, and then split it up between those buckets. And so I'm starting that process of automation. I'm kind of streamlining where my money's going to go. So let's talk about a different version of this. So the one downfall of this version, and what kind of makes it a little bit hard to automate this, is your payroll company at your job has to have the ability to do multiple direct deposits, as well as setting up percentages of where that money goes. So for example, 75% might go to your personal expenses, 15% of your paycheck goes to personal, and then maybe 5 to Webull, 5 to Better. If your payroll doesn't support that, not everything does, it's pretty hard to go with this. If your payroll company does, then the tips that I'm about to do for the different version of this will still work for you. You can just set it up at this level. A lot of companies, you're going to have to go with something like this. So this is the framework we're going to go a little bit more into detail with. And so it's very similar to our previous version, which is this, and then we're looking at this version. The only real difference here is that instead of the paycheck being split between all the accounts, we're kind of having to funnel it. So if your payroll company only offers a single direct deposit location, they don't allow you to split it, this is kind of the framework you might want to go with. So let's say I've got a paycheck and it's $2,000. That $2,000 is going to come to my personal expenses account, and that's going to be where it's at. So our personal expenses account is designed as a place that we don't touch except for bills. Okay, so if there's money in here, we don't want to spend it. We've earmarked that money for other purposes. So as a general rule, we just say, hey, if it's there, don't touch it. Now, we do have to have some kind of funds that we can spend for, say, groceries, or maybe we need some new clothes, gas in the car, maybe some food at work, things like that. We can pull that out to a separate account and make that a process where we are have money available for spending. So what I'm going to do is I'm actually going to split this money real quick. So right now, when we first get paid, we're going to have $2,000 coming in from the paycheck, which goes to our personal expenses. Okay. What we're going to do is we're going to take $300 of that, which is about 15% of our paycheck, and that's going to go to personal checking, which means, and now instead of having $2,000, we've got $1,700 left in expenses. Okay, so $1,700, $300 is what we've said, hey, it's safe for us to touch. This is what we're going to work with. So in that separate personal checking account, we've got our normal debit card, and we can do our spending based on that. Okay, so anytime we need to check the balance, see what we have to work with, see what we have available to spend, we just check here. We don't even have to bother looking at personal expenses. Now, personal expenses is a bucket that's meant for paying our bills, but we also might go ahead and start saving for the future. And so, for example, if we send money off to Betterment, we can start creating an emergency fund. We can start saving for college education for our children, any kind of vacation or major purchase. So let's say we take 5% of our initial paycheck, and that goes to Betterment. So that's going to reduce this down to $1,600. Okay, so once that $100 comes over to Betterment, you can actually automate that going to your individual buckets. So I've just automated $100 to my personal expenses every single month or every single paycheck. And then for Betterment, it's automatically going to take every month and it's going to say, cool, I want $20 to go to each of my buckets. That's just splitting that $100 up by 5. Okay, so super easy. So we're automating the transfer from personal expenses to Betterment, and then Betterment's automatically going to handle transferring to each of those buckets for us. So it makes it really simple. And then for our investing, it's going to take a little bit more work once it gets there, but we can still automatically deposit $100 each month to Webull, which can go to our IRA or to our brokerage account. So we already got another $100 coming out of there. So now we got $1,500 still sitting in our personal expenses. So what we're going to do, and the way that we'll actually automate paying our bills and start kind of thinking about not having living paycheck to paycheck anymore, we kind of go through and we create a list of all the bills we have to pay during that, or each month. And when we create those bills, sometimes certain bills will range between two numbers. So for example, your electric, if you've been paying it over the year, you know that sometimes your electric might be low, but it starts to get higher in the winter and the middle of summer because you're running your heater or your air conditioning more often. So try to create a list which gives you an idea of where your money is. I'm sorry, how much money you need to have going out or in that account to cover all your bills for that month. So for example, let's say our electric ranges between $130 and $300, depending on what time it's in for the year. I'm going to budget $300 that's going to be in my personal account or my personal expenses account so that I can actually make sure I've got enough money to pay those bills. And then once you've collected all the bills and you know that $1,500 is going to be enough during each paycheck to pay those bills, what you can do is instead of having a debit card linked to the personal expenses, you could actually make this so you're using a credit card. So what's going to happen here is if we have a credit card, and again, this isn't required, you could do this with a debit card, but a credit card has some extra benefits. If we have a credit card and let's say our credit limit on this is $3,000, that's enough to pay all of our bills for the month if we're doing $1,500 per paycheck. So what we can do is we can log into our utility, to our mortgage, to everything else, and actually set up automatic payments to come from our credit card to pay those bills every single month. So that means that we've automatically set up payments. We never have to log back in and check it. That's all going to be done automatically. The only thing we have to worry about is actually paying our credit card. So we know that our credit card is going to be dinged for about $1,500 a paycheck or $3,000 a month. And so what we're going to do is this $1,500 that's in personal expenses, we're going to make that automatically pay off our credit card. There's a couple different ways of doing that. One is if your credit card is actually with your bank, sometimes they will allow you to automatically pay the credit card in full every month on a certain date. So for example, let's say that on the 1st, I want to go ahead and pay all my bills and then immediately pay off my credit card. That's going to let me avoid interest rates because there's no balance on the credit card. And it's going to let me go ahead and pay that out. Now, another way you can do that is if you've got a smaller amount in personal expenses than what your credit card is going to be charged for, you can just go ahead and pay, say, the $1,500 every month on that paycheck towards that credit card. So now why are we using a credit card instead of a debit card? They function differently. The biggest benefit here is going to be that with the credit card, we can actually go ahead and pay all of our bills on the same day, or we can pay that before the paycheck actually comes in. And then once our paycheck's in, we pay that card off in full. We're not owing we're not having to pay interest charges because it's fully done. A secondary benefit of that is if you have a credit cards with benefits, such as flight points or cash back, when you're paying your normal bills you have to pay every month, you're now getting extra bonuses such as free flight miles or additional cash back on your card so that you're not, so you're getting an additional bonus just for paying things you already have to pay. Okay, so that's how we create a framework that's going to allow us to automate. And the automation is really all just in the automatic transfers from our personal expenses to our other accounts and in the automated payments coming to our credit or debit card here. It's as simple as that. Once you've kind of figured out where your money needs to go, you simply set that once and then automatically every month you say, great, hey, I've got my spending account here. I know this is safe to pay. My bills are automatically getting paid. I'm automatically saving for emergencies and for college and everything else. And I've automatically got money in my investment account, which I can then go choose where that money wants to go. So it's super simple. So I hope this video helps. This is the second time I had to record this. The first time was way too long, so hopefully this is a little bit shorter for you guys. If you have questions on this, leave me some comments down below. I'll do my best to try to answer that. If you want some videos where I go more in depth on how to set this up, or even just how Betterment works with setting up these individual buckets, automating the transfers between that, let me know and I'll record a video for that. So appreciate you guys watching this today, hanging on to the end. Hope to see you guys next time. Stay awesome, stay safe. See you then.